welcome back, and joining me for a look at the day's market moves is Richard Court from Argon Asset Management. Thank you so much for your time, Richard. We're seeing, I'm happy, Richard. I don't know about you, because it's been a while since we've seen the JSE kind of clocking a full week of gains, even though they haven't really, knocked the ball out of the park. But I mean, this is good, right? It's in the good direction.
Yes, well, firstly, good afternoon. Thank you for having me on your show. I think how we sort of are looking at it is, I think there's been so much negative sentiment sort of aimed towards South African equity markets that I think just the simple abatement of the negative news flow is positive for equity prices. The South African equity market is very lowly rated. If you look at the current valuation compared to its history, we are very close to the valuation that we've seen at very dark periods of time in our history. So eventually you just get to the point where things there's not like too much more negative news that can be priced into the equity markets. So I think that's where we might be. I mean, we saw the SA manufacturing output data come out, but it was disappointed to the downside, quite considerably so, mainly impacted by motor vehicle production. And yet still the market is up today. So it's one of these things where it's a factor of what's sort of priced in and what hasn't been priced in.
And it's not even that it's good news that are coming out, but just less bad news. There's a line in a song that says the absence of a tear has been the only moment of happiness I've ever had. And I guess you could attribute that to the JSE. Well, talking about happiness, gold quite happy today. All the gold counters are up, and we actually did have quite a lot actually of operational updates out this week, including today. DRD Gold, I think at some point it was up about 5%. A quarterly operating update there saying that their gold production was down, but obviously supported by the higher gold price. And actually more good news is that the all-in sustaining costs were also down by 3%. Was this reaction from the market, this glittering reaction, based on the update, or just the sentiment on gold at this point?
Well, let's just stick to the miners. It might be easier to deal with them. I mean, they have no control really over the gold price. I mean, they're exposed to the rand gold price, so depreciating rand and a higher US dollar gold price is good for them, especially the South African miners that have South African operations such as like DRD Gold and Pan African. So particularly with DRD, it's a slightly different proposition, because they're not really a gold miner. They sort of harvest these above ground tailings. So it's a slightly different business model and a different sort of risk profile. But they've done a very good job in containing their cost inflation. I think the cash cost only grew by about 2% quarter, which is a very good result. And that's all they can really focus on, is just focusing on their production profile and keeping their costs in check. And then they are basically a function of the rand gold price. So it's a decent result from them.
Well, actually, I get you saying, DRD Gold has a different profile. But then what have you made really of the divergences that we have seen in these gold miners that have come out with operating updates this week? Because Gold Fields was quite under pressure when it released its operational update, I think by about 7% on the day. And then you had Pan African coming out with, some good news. They've really managed to manage their costs, also just really benefiting from the higher gold price. What are you making of those kind of divergences there?
Yeah, so I think, as you say, like the market wasn't very impressed with Gold Fields' update. They seem to have guided for this quarter for production being reduced, but I think what caught everyone by surprise was the cost that increase. I think it was not only were the costs higher than what we expected, but it was also on top of a poor quarter than the prior quarter. Just looking at the cost base, so year on year, it's a significant increase in costs. So just looking at Gold Fields alone, there seem to be stand out, and not in a good way, in terms of struggling to contain costs and also it's disappointing on the production profile.
Yeah. Let's take a look at Sibanye. That was actually quite an interesting one. Also today, catching the positivity. It did come out with its quarterly operating update as well, saying that there seems to be a sense of improvement in that PGM space, but not so much on the gold side. What did you make of that update?
So I think everyone's sort of their focus on Sibanye is mainly on the PGM side of things. So, like the other PGM producers, they are being forced by the current PGM basket price environment to really focus on their operations and focus on their cost base. So they've taken action in their US operation, which is the Stillwater mine, to reduce the costs, and you saw the benefit of that in this update. They managed to reduce the cost to just over like $1,300 per ounce, which is a significant improvement. Only problem being is that the price of the basket is still below $1,000. So while it's an improvement, it's not where it needs to be in the current pricing environment. In the South African operations, they've also taken some steps to like restructure the cost base and to try and preserve the assets there. We will only see the benefits of that, if any, in following set of results.
All right. Well, Richard, let's get to your stock pick for today. Where are you positioning yourself?
Yeah, so completely different what we've been talking about. Our preference, or one of our larger holdings in our portfolio, is British American Tobacco. We all are familiar with it, I'm sure, but it's currently like a 10% dividend yield, and it just, compared to its own history, it looks very cheap. One of the overhangs we've been talking about, like negative news flow, one of the overhangs with British American Tobacco was the potential ban on menthol products in the US, where British American Tobacco is overexposed with a greater market share and that sort of product. And towards the end of last month, the White House came out and said they were going to delay any decision on that, which is actually good news for the company, but the market seems to disregard it, and the share price barely moved on the day. So we just think it's just too cheap at a 10% dividend yield.
All right. Well, thank you so much for your time and just giving us insight on what has moved investors' money today and this week. That was Richard Court from Argon Asset Management.